Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
You're watching Stockwatch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Alex Duys from Umthombo Wealth and Cobus Potgieter from Southern Cross Capital. We are pre-recording this episode, but do continue to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch, and we will get to them in the next episode. Thank you so much for your time, gents. A very, very interesting day, because I see that the JSE has actually shown significant gains today, but quite surprisingly, and a pleasant surprise, is the strength of the rand. Alex, I guess what's got the markets starting the week with a spring in their step?
Yeah, good afternoon. Look, certainly, if you look at the rally of today, it's predominantly resources, right? So once again, gold having a very strong day thus far, as well as PGMs. And the continuous weakened dollar, obviously, also playing a bit of a role. So that's why the rand seems quite strong, but relative to the dollar only. It's been quite not the same level of strength relative to, for example, the euro and the pound. So I think that's important to note. Other than that, there's obviously been a couple of companies that's reported also thus far, which has done reasonably well. But predominantly driven by resources. One or two others, like Investec, also having a good rally.
Yeah.
But yeah, I think that explains the movement we've seen thus far.
Cobus, we're also still digesting those non-farm payrolls that came out on Friday. Is there also optimism on that, where bad news is good news?
Yes, it seems the more we digest them, the more we become convinced that a further cut is on the table. I suppose, hence a bit of dollar weakness and a bit of risk on in the desperate search for yield. So I think the market is positioning constructively on the outcome here. We've seen one or two Fed governors reiterate that there's a good argument for that. It seems there's even a small probability arising for a so-called jumbo cut in the form of a 50 basis point cut. I believe that's somewhat unlikely, but the market is with near certainty looking for 25 basis points and seems to be excited about the prospect, and we're seeing that flow through across most asset classes globally.
Alex, you mentioned, of course, the strong gains that we've seen on Investec. There's no sense. Why this big jump? Currently almost 6%.
Yeah, to be honest, I do not know. I'm not able to see information on that. So unfortunately, I can't give any insight into that.
Okay. But just any general views on Investec, because I think Investec has these moments where investors are just buying, and then times when it's just quiet. A lot of analysts will always mention the value in the big four banks, but never really focusing on Investec. Just on your side, Alex, just any thoughts on Investec and its growth trajectory at this point?
Yeah, so we were investors in Bidvest pretty much for at least 5 years, up until a few months ago, and in hindsight, we probably sold too early. So at a particular stage, the share price was obviously very depressed, and its value in the UK business wasn't reflected in the share price. And also with the new management team in there, they have really unlocked also a lot of value, reducing the stakes in 91, for example, as well as some of the property companies. It just much better capital allocation. So you can see in the ROEs have picked up quite a lot in the business. So that means that the rating of the stock has increased. So now I think the easy money certainly has been made on Investec, but there's still decent earnings growth prospects in our view. And if the UK continues to perhaps surprise on upside, which is difficult to say at this moment, then there could be more to come. I think most of the credit loss ratios seems quite good at the moment. I don't see any problems really, but it will eke out single digit earnings in our view, probably over the medium term.
Okay. I mean, just talking about, the big four banks versus Investec. Cobus, if I remember correctly, I think you did pick one of the banks as a stock pick. Would you be looking at Investec with the same kind of fervor?
Certainly not the same. It's lower quality, and I mean that's not to criticize the management team or the structure, or it's just the nature of the business. So it's not quite as predictable, and it's lower quality, more exposed to less comfortable counterparty risk. More of a merchant bank than the so-called big four altogether. That's not a bad thing, of course. But it does tend to trade at a sort of a depressed valuation relative to those. But it has been attractively valued for a long time. This rally today, I mean, it's properly inexplicable. As at, call it 1 o'clock, we're talking quadruple the usual daily volumes on absolutely zero news. So one has to think either, Alex and I are both missing something very, very obvious, or some major offshore institution is taking a very convicted position here.
Okay, definitely one worth looking closely into, I guess, over the next coming days. One of the big movements today we're also getting is from Valterra. That's surged more than 5%. And of course, we know the corporate action that has affected that stock that has kind of provided an overhang. Alex, would you say that this is a sign that is done and the kind of air is clear for Valterra to move at this point?
Certainly. I mean, that was always an overhang that, had an impact on the share. And if you look at the relative year performance year to date, it has underperformed for that factor. But today it's doing quite well. But the likes of Sabanya and Platts, Novum also all up a few percentage points. So if we remain bullish on PGMs, these stocks will do well. And plus, of course, it's got much better quality compared to some of the others. So should have better control of costs, will generate better ROEs, better free cash flow. And perhaps some of the balance sheet risks that we were fearing when Anglo American usually took out a special dividend is not now on the table anymore because of the high PGM prices. So I think the business is well positioned. But it's not as much geared as some of the others on an upcycle, but does offer you better protection if there's a pullback in PGM. So I think that's something to be cognizant of.
How would you be positioning yourself in the PGM sector at this point with the so much sun shining on the sector, Cobus?
I'm a quality guy. So I mean, I've been punished for being underweight PGMs year to date. And frankly, the only one I like is Valterra, which gives you limited upside relative to those marginal producers. Again, not to be scathing of their business model, that's just the nature of it. Harmony will outperform Anglo Gold when the gold price goes up by another $100. If you're a higher cost producer, that's just the nature of the game. Looking for shorter term games, but in the long run, I'd rather be in the high quality name. And look, the enormous institutional support that came off the back of this last accelerated book build is quite bullish for the stock. And I was quite surprised that it didn't rally substantially further relative to its peers. It was sort of in line-ish, just given the placement off the back of that news last week. So it was certainly due a little bit of a call it a technical repricing, just off the back of that overhang going away. And the market typically likes seeing that level of support and how easily that book build was fulfilled, and how difficult it was for us local guys to get a significant allocation.
All right. Well, let's go into one of the interesting ones. Telkom. The question goes, some insight on Telkom, and we saw the rally from last week on the back of the rumor that MTN might be in touch with some corporate finance advisors on a potential takeover of Telkom again, takeover bid. Of course, we know that that has been the story in the past. But quite interestingly, I actually had a conversation with Ralph Mupita on Friday at the company's editors event, and he explicitly said MTN is not in any active talks for a takeover bid. Alex, I'm wondering then, what does that do to the kind of bullish case that we have seen for Telkom? Does it change anything if MTN is saying, no, we're actually not going after the company at this point?
Yeah, it does seem like it was a poorly written and research article there from Bloomberg, but saying that, I mean, the probability of MTN and specifically Telkom's OpenServe doing some form of joint venture, I think, cannot be dismissed. With the Vodacom massive deal, that has put into at quite a disadvantage in the moment. So they need to do something. So there might not necessarily be a takeover of Telkom, but some sort of partnership, I think, still seems quite likely in our view. We, of course, also saw in MTN results how poorly they performed locally. So they've got new management in there, so perhaps new ideas, new strategies. So simply one to look out for. The valuation that was paid between Vodacom and Massive is obviously much more higher, but you could make an argument because quality of assets not the same and perhaps be a joint venture, so probably at lower valuations. But certainly there's something brewing here, and I think it shouldn't be just simply dismissed based on what Rolf has just said now.
Yeah. I mean, would you be looking at Telkom, Cobus, from a corporate action lens, or just from purely that the company is able to survive on its own and that it has proven? What lens would you be looking at Telkom from at this point?
I wouldn't dismiss one approach relative to the other. It has certainly been the topic of potential corporate action, and we've just refocused on that possibility once again. I guess I'll point out, and I don't like engaging in rumourage, but denying that they are in active talks. The rumor didn't even state that they were in active talks. It's that somebody was chatting to corporate advisors, which I suppose companies do as a matter of course. In any case, so it certainly sounds like it's something that is being discussed, at the very least, as a possibility within the MTN leadership. And given their renewed focus on trying to fix that struggling South African business, something in this space certainly does make sense. And it's always nice, if you happen to like Telkom in any case and thought it was value. I mean, it is value. It always seems to be cheap. It's nice to have that additional upside, potential value unlock kind of built in the form of a deal here. So from that perspective, I guess it adds to the relative attractiveness of the stock.
All right. And I actually want to go into MTN itself because it was quite interesting. As much as MTN is doing well in all these other countries in the rest of Africa, South Africa, they are struggling. And Ralph even said that they've seen, particularly in the prepaid market in South Africa, that Telkom has actually won some market share against them, which they will be trying to win back aggressively. Cobus, would you be looking at MTN and Telkom? Or what level of competitiveness would you be looking at MTN and Telkom from?
Yes. Again, not to reiterate what we were just saying, but if I were to play this, I just hold the Telkom and hope for MTN to look to buy back some of that market share down the line. Ultimately, MTN itself, particularly because of the jurisdictions that it operates in, we've seen them. We've seen the issues around Iran cell and the potential sanctioning and inquiries by the U.S. Department of Justice. It tends to be very highly cyclical, up and down, commodity exposed, ultimately, and subject to great execution risk, ultimately. And I think given the run we've seen in MTN lately, you've been rewarded for assuming that risk very recently, and right now I would perhaps be out of it again, looking for that cheap entry point, which inevitably seems to always repeat itself at some stage down the line. Telkom, frankly, higher quality, more predictable, with that additional upside in the form of potential corporate action optionality.
Yeah, interesting that you highlight that predictability because, yeah, for a long time, MTN was unloved, of course, because, for example, of the issues that are happening in Nigeria, but we have seen a turnaround there. But of course, Alex, the question is always, is this sustainable? How would you be looking at MTN?
I concur there, Cobus. I'm certainly also not a fan of MTN. I think, first of all, it's the jurisdictions, the forecast risk of currencies and the economies there is very difficult. Also that even though they make lots of accounting earnings, they're unable to extract the cash out of it. So, for example, in Nigeria, they're making a lot of money there, but money's not flowing back to shareholders in South Africa. And then all of these claims, potential lawsuits, really scares me. They are brushing it off, but I mean, they've got cases in Afghanistan. We know what matters with Iran, Turkcell, but if Iran, we know that the US government, Iran is on top of their list. There's a lot of South African politicians tied to MTN and Iran, and we know there's potential sanctions against these individuals as well at some stage in the future. So there's just too many overlaps for me in the moment that makes MTN for me, I still well clear at the moment. So I agree with Telkom. We know they're going in a certain direction. There's potential corporate action with MTN. There could be serious downside risk if something goes wrong here, but the probability perhaps not as high as I state here, but it's something to be cognizant of.
All right. Well, let's get into some of the company news that have come out of the JSE. And of course, we are still in the thick of results season. And Sun International came out with its half-year results today. Not much movement on that share price. I don't know if it has, it's maybe just a muted reaction to the numbers, Cobus, or maybe just investors taking a breather.
Well, essentially it was well guided by the trading statement. So you'll see there was an enormous shift in the share price 4 to 6 weeks ago.
Yeah.
So it was one of these, I suppose, better detailed trading statements that give you a bit of insight into the underlying division's performances. And I like that. I like when there's detail in the trading statements. I think the thesis for the business sort of still holds. It's still quite keenly priced. There's a little bit of execution risk in terms of that, just for me sitting here, I guess, in terms of that the Latin American exposure, Chilean exposure, if you want to put it that way. And but I still like this. I still like the story. I still like the valuation, and a good set of results, well guided. So that's a tick on governance at least as well.
Yeah. Well, I mean, of course, we know in terms of the hotels and resorts, that's relatively solid. Even if we do see some softness there, there'll always be a rebound of that because of the seasonality of it. What's interesting though, and of course I guess what has gripped a lot of investors' interest is the online gaming division, and of course now speaking also to the new CEO that has a gaming background. It's quite interesting because I think I saw that in terms of the land-based casinos, those aren't really doing so well, and I think they said that, I don't know, they take a look at a few options for that. What do you make of what Sun International is doing on that gaming front, Alex? And do you think that this is something that investors can sustainably hold on to in terms of the investment thesis of Sun International?
Yes, we do like Sun International. So I think the Sunbet online gambling is the biggest opportunity, but also some of the biggest risks are in there. So opportunity-wise, the growth could potentially be very material. They only got about 3% of the market share in South Africa, and we've seen revenue up over 70%, and they're already making decent EBITDAs from it. The risk side, regulatory risk. We know from a societal perspective, online gambling is perhaps having a bit of an impact on middle class, lower LSM as well. There could be higher taxes as well. And of course, you've got big competitors from offshore. So those are stuff you have to consider. But they are trying to incorporate that into their land-based casinos, so omnichannel approach. which makes it different to perhaps other players that doesn't have land-based casinos. And I think we also like from this results today is that the CEO did highlight there's a lot of room for improvement in the land-based casino, the actual Sunbet, the Sun slots, as well as the resource business. So I do think this business will probably continue to grow earnings high single digits, perhaps low double digits going forward. Also, there's probably going to be a reduction in interest cost if they don't do acquisitions. So that's something to think about. That will also boost earnings. But also, most importantly, the cash earnings in this business is substantially better than the accounting earnings. So they could easily fund the dividends, capex, and do special dividends, and even do M&A with the balance sheet capacity. So all in all, I think the business is relatively well positioned for very compelling valuation as well. But some risks, as I alluded to.
Yeah. All right. Well, before we get to your stock picks, Alex, I know that you are choosing Pan-African Resources today, and of course, that's one of the big movers on the day, up over 8%. I saw an announcement today. Cobus, yeah, how would you be looking at a Pan-African Resources, and particularly considering the growth that we've seen and the bullishness that we've seen on these gold stocks lately?
So I suppose this announcement of pursuing a main board listing on the LSE as opposed to the alternative where they currently are should be seen in conjunction with the trading statement that was released last week. Looks like, again, as we've seen, like I said, when there is a boom, you want to be in the marginal producer, and this is certainly one of those. And it's nice for them to be executing on growth, on a growth strategy, in the midst of this boom. Enormous growth in headline earnings, largely driven by the higher gold price, as well as a 6.5% increase in gold output. Interestingly, again, I love detailed trading statements. They specifically allude to the collar they had, essentially hedging the gold price, something which Anglo Gold was unpopular for back in the day. We can have a whole philosophical discussion about whether or not management teams should be taking such views, unless they can, really guarantee operational performance and hedge against a certain outcome, but they are unhedged as of the 1st of July. Okay. And during this period in particular, that hedge cost them 23% of profits. So profits are lower by 23% because of hedging. So they're now taking spot. And if they continue to boost earnings and output, and the gold price remains elevated, there will be massive beneficiaries.
Yeah, I mean, yeah, that's a huge relief that they are now unhedged. Of course, we know that what investors did to Harmony, because they are still hedged for a while. So, Alex, why you're choosing Pan-African as your stock pick today?
Yeah, so a production is going to go up about 40% year on year, combined with the unhedged positions Cobus just referred to. So for those investors, I don't know where gold's going to go to, but if you're bullish gold, and if you think gold's going to continue to keep these levels go higher, then Pan has got very good gearing towards that. With the 40% high production, as well as the hedge falling away, and very importantly also guiding that they are going into a net cash position. So they've pretty much paid off all the debt of all the capex projects they've had over the last few years. So they're in a very, very good position. And combined with the listing main board in the UK, you could see more institutional interest as well. I've also noticed locally some big fund managers have also been buying it, notably Alan Gray and so forth. So there seems to be more interest building up, and who knows where golds go, but if gold continues to go up, I think Pan will follow suit.
And the chart looks absolutely, absolutely beautiful. Cobus, where are you seeing opportunity today?
So my call isn't even my call, but it's sort of a technically clever entry point into Capitec. So I'm going for Curro, which famously now is subject to corporate action. And the reason I like it is because, to me, it is a cheap entry point into Capitec at the moment. You don't even know when it's going to settle, but essentially I think there's a high degree of certainty that this deal does get executed. And if you buy 100,000 Curro today, you will probably towards the end of the year, receive 281 Capitecs and 7,617 consults, as well as 85,800 Rand in your money back. So essentially it becomes a purchase of a basket of securities at what amounts at the moment to close to a 4% discount. So if you were looking for Capitec and perhaps a little bit consult on the side anyway, this creates a very, very cheap entry point into those vehicles, specifically the Capitec, which makes up in excess of 80% of the settlement that's going to come through. And especially if you already hold those in your portfolio, you can sort of backwards infer the math and figure out where the free upside is here by switching out that exposure into the Curro instead.
All right. Well, fascinating. Thank you so much for your time and for your analysis today, gents, and educating us, making us smarter. Really do appreciate your time. That is all for tonight's Stock Watch. Thanks to our guests, Alex Duys from Umthombo Wealth and Cobus Potgieter from Southern Cross Capital. Up next, The Close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.